the volatility is the price you pay for the performance that you get. And oftentimes the best investment idea isn't the most comfortable investment idea. And you're going to watch Netflix. Let's take extreme. You're going to live in your parents' basement, watch Netflix, order Domino's pizza, and stream YouTube video for the rest of your life. Do you have an inflation problem coming? Probably not. If you wanna buy your own house, you have a bigger inflation problem because housing went up 15%.
Welcome to Dream Richer. What's the biggest factor stopping large investors from jumping into Bitcoin? As most argue, it's volatility. We saw this just last week when Bitcoin was hitting its lows, which sent the whole market into extreme fear when measured on the Greed and Fear Index. Bitcoin, made publicly available in 2009, began its rise to popularity around 2010 when the price for one token rose from fractions of a dollar to $0.09. Since then, its price has increased by tens of thousands of dollars, sometimes rising or falling thousands of dollars within days. The reason behind Bitcoin's large volatility comes from a range of factors. Like most commodities, assets, investments, or other products, Bitcoin's price depends heavily on supply and demand. As an asset adopted quickly by investors and traders, speculation about price movements plays a critical part in Bitcoin's value at any given moment. Especially media outlets, influencers, opinionated industry moguls, and well-known cryptocurrency fans all create overblown investor concerns, leading to price fluctuations. However, as Michael Saylor argues today, Bitcoin's volatility is the price you pay for higher returns. In some sense, it's like that one famous quote that reads, "No pain, no gain." If you find the video helpful, then don't forget to subscribe. Let's get right into it.
Well, Bitcoin's the best performing asset for the past decade, and it's 100x better than gold, and it's 10x better than equity portfolios. So the volatility is the price you pay for the performance that you get. And oftentimes the best investment idea isn't the most comfortable investment idea. I think if I told you there's 100% certainty you're going to lose 7% of your money over the course of a year, you might think, well, I have a decade before I lose half of my money. I have time to think about it. That's the status quo when monetary inflation is 7%. If I told you there's a 100% probability that you're going to lose 20% of your money over the next year and half of your money over the next 3 years, well, you might think you need to move faster. Well, what if I told you you're going to lose all your money? What if I told you the currency is going to collapse to zero in 3 months, which is kind of what it did in Zimbabwe and Venezuela? Or what if I told you we're going to have 95% inflation? I think the unofficial inflation rate in Argentina is like 85% this year. What if I told you we're going to have hyperinflation? Everything will be twice as expensive next year. Now, how long would you wait before you took a risk? How do you actually get comfortable with the volatility? Well, I think first you have to understand how big your problem is.
Bitcoin is sometimes critiqued for having no intrinsic value. In a debate between Michael Saylor and Frank Gistra, Bitcoin was criticized for aspiring to be a great investment asset, which would never be. Much of these arguments come from the fact that Bitcoin's network is decentralized, and the cryptocurrency is not used much in retail transactions as of yet. One can argue that Bitcoin's value is similar to that of precious metals. Both are limited in quantity and have select use cases. Precious metals like gold are used in industrial applications, while Bitcoin's underlying technology, the blockchain, has some applications across the financial services industries. However, the definition of value in a currency has changed over centuries, from physical attributes to the velocity of its use in an economy. Bitcoin demonstrates some attributes for a currency, but its main source of value lies in its restricted supply and increasing demand.
And the second thing is one, a time horizon. And what's your aspirational goal? For example, if you don't aspire to change your lifestyle one iota and you're going to watch Netflix. Let's take extreme. You're going to live in your parents' basement, watch Netflix, order Domino's pizza, and stream YouTube video for the rest of your life. Do you have an inflation problem coming? Probably not. If you wanna buy your own house, you have a bigger inflation problem because housing went up 15%. If you want to get married, buy a house, have 3 kids, and if you want to take expensive vacations and have a house on the lake, you have a big inflation problem. Guess what? Luxury homes on the lake went up in price a lot. I think the risk and the discomfort today of owning Bitcoin is a heck of a lot less than the risk and the discomfort of getting in a ship or getting on a horse or getting on a wagon or walking, right, or settling and doing what you need to in order to secure your civil rights and your property rights and your freedom. But there is an analogy. The only way you make the volatility go away is you make the opportunity go away.
And I think that's an important thing to note is, yes, there's volatility to Bitcoin in the short term. I've heard you say if you're looking at a number in anything less than a 4-year increment, it's just noise. And that once you extend out to 4 years and beyond, suddenly it actually becomes a story of, growing, I think it's like 200% year over year, which is, pretty thrilling.
It's clear from Michael Saylor's explanation that Bitcoin is the ideal store of value that is not susceptible to outside propaganda. In order for an asset to be deemed useful currency, there are 6 key attributes it must check off. These include scarcity, divisibility, acceptability, portability, durability, and resistance to counterfeiting, also known as uniformity. These qualities allow a currency to find widespread use in an economy. They also limit monetary inflation and ensure that the currencies are secure and safe to use. All 6 of these attributes can be seen within the Bitcoin protocol. This is since there will only ever be 21 million Bitcoins in circulation, with the halving set to take place in 2024, boosting its scarcity. As such, Bitcoin can be bought in fractions and its protocol cannot be changed to suit the needs of certain individuals. How do you think Bitcoin will perform in the long term? Could we see it overtake gold and other investment assets as Michael Saylor suggests? To learn more about the latest crypto news, watch these videos here.